Hey everyone, Chris Johnson here with Money Morning, and we are going to spend 10 minutes getting into the biggest earnings announcement coming down the pipeline. That's right, Nvidia is about a week away, February 21st. Mark it on your calendar. I'm going to walk you through my approach, how I look at the stock ahead of earnings and decide whether or not I'm going to be able to buy this on a dip, which is the case with Nvidia, or if the stock's going to run through the roof again. Stick with me for about 5 to 10 minutes. I'm going to explain my approach in a very easy way. You're going to love it so much, you're going to apply it to every single stock that you're watching ahead of earnings. So, without any further ado, let's get into it. Okay, everybody, Nvidia is the big one. We say that they're all big, but this is the really big one. Nvidia is the company that represents AI, and it's the hottest thing that's out there right now. So it is just natural that everybody is just waiting for this report to hit. We have seen the stock go up 50% year to date. If you look over the last year, my God, the stock is up 120% over the last year, 70% over the last 6 months. There is nothing out there, at least in terms of the market, that has outperformed Nvidia. So a lot of people that may not have it, they've been waiting for an opportunity to buy it, are looking at the stock saying, should I buy it ahead of earnings, CJ, or should I wait? Let's talk a little bit about expectations real quickly. And believe me, give me 3 minutes of your time. This is going to be an easy example. You can apply it to any stock in the market that you're watching ahead of earnings to figure out what to expect. So it goes back to, for me, middle school. Back in middle school, I was a little bit of a math nerd, right? I was a kid that didn't have to do my homework that often. And I walked in and studied for 15 minutes for a test and got an A. I came from a long line of engineers, so it just came natural, right? So what I learned in the 7th and 8th grade, and specifically that period, because that's when I was starting to run into a little bit more challenging math, was that if I came home and told my parents, hey, I didn't have to study for this test and I got an A, or I finished up all my homework at school, I left the books there and everything, it was fine with my parents. But when the quarterly grade cards came out, I had to get an A plus, have a nice little note from the teacher talking about how well I'd done just to please my parents, right? Now, when I started running into a little bit of difficulty, I learned very quickly all I had to do was go home and tell my parents how difficult it was and lower those expectations. Hey, I might bring home a C this quarter because I'm having to study more for tests, or my homework is taking longer periods of time. And guess what? I knew I was coming home with an A. And when I did, it wasn't just a pat on the back. It was literally, let's go out and get pizza, ice cream, do all the fun things because I exceeded expectations. It is no different in the stock market. When companies have huge expectations, it is harder for them to continue meeting or exceeding them, and that can put selling pressure on a stock. Now, bring that to the company that everybody's going to be watching, Nvidia, and you'll see exactly how I'm applying it. And just to give you an idea, last 4 quarters, I've been using this very simple approach. In each of those quarters, I've nailed the activity. I'm not trying to brag. I'm just saying this is a worthwhile approach, especially if you're looking at an opportunity to buy the stock. So what you're looking at is a chart of Nvidia's earnings results over the last 5 years. 20 different reports, right? And the things that are key here are these lines, first of all. You've got an orange line, which are the the actual performance of the stock is that orange line. So the earnings performance. And then that blue line down here, well, that's Wall Street's expectations, what they thought the stock was going to do. And they've kind of been moving along with average expectations, right? If you think about what's happened with Nvidia over the last 2 or 3 years, it really has put itself out there and taken off as AI has turned into their foundation. Remember, this is the same company that was famous for video cards and cryptocurrency mining systems, the guts behind them. Now it's evolved into AI. So the expectations have now caught up. Look at how that blue line has taken off here. Absolutely rocketed. That's Wall Street now saying you better bring home A's every quarter because our expectations are through the roof. So they no longer have the benefit of the doubt. Nvidia does. They have to perform. I call it exponential expectations. We have seen the results grow parabolically, and that's because of AI. And they're going to continue to grow. I'm not holding back any secrets when I say this is an industry that is still going to see tenfold growth over the next couple of years, and Nvidia is right at the heart of it. So do I want to be a buyer of the stock? Absolutely. Do I want to buy it ahead of earnings next week? No. We'll look at the numbers and where I want to be a buyer. And before I get into that, don't forget to like and subscribe. We go through this type of information in this analysis all the time. I'm looking to give you an edge on the market, a simple edge. So make sure you hit the buttons, do all the things, and join us here at Money Morning. So back to those expectations. We have seen them just go through the roof. Parabolic growth in expectations, right? What does that mean? It means we got to see the stock absolutely knock the cover off the ball to continue. Now, the last 2 quarters, and that's where you've seen a lot of that growth in the expectations. Nvidia, even though it's up more than 100% over the last 12 months, and again, 70% over the last 6 months, it has still seen selling pressure after their report. So traders have come in immediately after these reports and sold the news to the 10% in one situation, and then 20%. That's in the last 6 months. So you've had 2 opportunities to buy the dip on Nvidia, and it's simply because of that relationship between expectations and the results. They are still beating those expectations. Again, look at that orange line outperforming. But the fact that the expectations are going higher means you've got more of a sell the news opportunity for the stock. So let's look real quickly. Let me pull up the stock chart here. That's Nvidia's. I'm going to take a step back before we get into the numbers on Nvidia and give you an example of a company that has had low expectations in the same space. The company is Palantir. This is one of my AI sleeper stocks. Love Palantir, right? They're not really known as one of the headliner AI companies, but it is certainly where their business is going. Now, last quarter, Palantir kind of went to the market and said, hey, we're having some problems. We think things may slow down a little bit over the next quarter. They lowered those expectations. Now, even though they outperformed in terms of earnings, you still see the stock took a little bit of a bump higher and then rolled back lower and did nothing over the last quarter. It's just kind of been sitting there stagnant. Well, guess what? Last week they came out and said, hey, things are looking better. The expectations from the street were low. This stock took off 20% the first day, another 5%. You're seeing it pull back a little bit. Maybe a buy the dip opportunity around 22 on Palantir. That's a little bonus for you. But this is the reverse. This is what Nvidia is not in a position to do right now. Expectations are not low on Nvidia the way they were on Palantir. They are extremely high. So let's take a look at Nvidia now, because that's the question that everybody is asking. Where is this stock going to go, CJ? I mentioned the last 2 quarters. Expectations from Wall Street have gone through the roof. And the fact that we talk about this stock every single day in the news media, in the written media, everywhere. My mother calls and asks me about Nvidia stock. I always use that as one of those points to say the market is saturated in terms of the expectations, the high expectations. This is what I refer to as a crowded trade. So in other words, anything that's unexpected is going to cost in terms of the share price. It's going to come down. Regardless of that, the fact that we have seen this nonstop rally, as everybody knew the earnings was coming, tells me that the stock is priced for perfection. Now, it just crossed above $700. Round numbers are always important, and I'm going to give you another round number in just a second on Nvidia as part of my buy the dip strategy. Round numbers are always important. You can look and see $500. When we were trading around $500, the stock kept coming up and seeing resistance and pulling back. Then we shot up to 600. You got a little bit of a stall, but earnings expectations are what now have driven it up to $700. And I think the stock will probably tread water around 700, maybe even poke a little bit higher over the next week, as we get closer to earnings. But with the expectations having been this high, I want you to think about the last 2 quarters. That's our last quarter's earnings. That was back in November. And then you've got another that was in August. Now, that August earnings, they beat expectations, again, handily, but that was the part of that curve that was really starting to accelerate to the upside in terms of expectations. The stock came out. It rallied the first day. We saw it moving up more than 12, 13%. And then over the next couple of weeks, you saw a reversal that brought Nvidia shares down 20%, and you ultimately got the opportunity to buy it right around another round number, $400, $420. And that was the exact price that I was looking at to get into the stock on the long side. Excuse me. Now, last quarter was a little easier. You had $500. It was giving you resistance. Nice round numbers. Company came out, beat expectations, and we still saw that price for perfection take it down to the 50-day moving average, which is always a line, a trend line that I like to watch in terms of long-term buying opportunities. And that was your buy the dip opportunity for Nvidia after last quarter. It was a 10% pullback. Now we've got on this breakneck rally as everybody's whipped up in a frenzy over AI. I think the expectations from a pricing perspective are way ahead of itself. I do believe that you've got Nvidia that is set up for a 10, 15, maybe even 20% pullback after their earnings. That would bring the stock price down around that $600 level or so. That would be 15% right now, right in the middle of those numbers I just threw out. And that would be the price that I'd be looking to buy the dip. So $600 if I'm looking for a bargain on Nvidia. Now, keep in mind, we may see a knee-jerk reaction where the stock immediately trades higher, like we did in August, 13%. And all of a sudden you feel like the train's pulling out of the station. I've got to get on board. Resist that urge. Let it play out for just a couple of days and see if you see a little bit of selling pressure coming in. That'll typically start to go from a trickle to a heavier flow, and then you've got a self-fulfilling situation where the market is just taking profits and taking them regardless of what the outlook is. Another tip is to keep an eye on that outlook. Right now, I mentioned we're entering a super cycle for AI, and I expect to see us go from $40 billion to $400 in terms of where the aggregate is for the companies involved here. It's going to be huge. Companies like Nvidia, Microsoft, Alphabet, even Apple, which has been left behind, are going to be part of this. But that's down the road. Expect that super cycle to kick in sometime in the second half of 2024 and carry us into 2025. The comments from management will start to lay those expectations. And I think Nvidia is going to be a little more in the camp of Palantir, where we may see them try to temper expectations, maybe promise that they're going to bring home a B instead of an A+ over the next quarter or the next year. Any comment like that is going to get everybody on the selling boat for maybe a week or two. Then you'll see the analysts come in and start to defend the stock and move their target prices higher. I mentioned target price, and I want to point that out because that's one of the key things I watch. Right now, the analyst community has an average target price that is right around $650. That's why I think that's the first level that you'll see the stock move to. All the analysts will defend that, and you're going to see quite a few of those start to raise the target prices since we're already trading above $650. The highest one out there right now is $1,100 a share. Between you and I see Nvidia hitting $1,100 over the next year, maybe a little bit more than that, but $1,100 is in Nvidia's future. I just think you get the opportunity to buy the dip. About 15%. $600 is the number I'm putting into my computer. I'm going to watch it closely after the report. I'm going to use that simple middle school approach of looking at the expectations before the grade card comes home. And in this case, I see it just as it was the last 2 quarters for Nvidia. Expectations through the roof. Look for a little bit of a pullback. That 10 and 20% the last 2 quarters, we take right in the middle at 15, and I'd be happy to buy the shares long-term at 600. The coming weeks, I'll share an approach at how I actually buy these shares because I don't buy Nvidia stock anymore. I buy something that lets me control the stock 12 months, 16, 24 months into the future. So I'll share a little bit of that in our educational videos. Until then, I wish you the best trading success. We'll catch you on the other side of Nvidia's earnings report next Thursday. Have a great day. Bye-bye.